Hey, it's Michael Saul with the Stock Market Trading Watch List for Wednesday, January 4th, 2012. Before I get started, just a quick announcement. I'm going to be starting Sunday night strategy sessions this coming Sunday, the 8th of January. If you want more information on this, you can join the email list at stockmarkettransx.com. I'll be releasing the info on how to attend later on this week. It will be free to attend live, but if you want the archive, there is a small one-time fee. It's not a monthly fee, it's just a one-time fee, and you'll be able to get the archives, I believe. But more on that as it gets closer. Now, the reason I'm telling you this now in the video is that these videos are going to be going away. I'm not going to be doing a full stock market watch list video every night anymore. I'm going to still do the S&P video, and I'll probably throw a video up at least once a week, maybe twice a week. But I'm rolling out my newsletter, my monthly newsletter, and the Sunday night strategy sessions, which is going to be, like I said, free to attend live, is going to map out what I see in the market. It's going to give me the time I need to really go further in depth. I'm going to go through the entire process that I look at, and I'm going to take questions from people that are there if they have any questions on specific stocks. As always, it's not advice. It's just going to be my analysis of them. So that's where we're headed for the new year. So join that mailing list, and in a couple of days you should get an email about how to join me at the Sunday night sessions. And in the meantime, you'll get a daily email that I put out. All right. So that's it. All right. That's the announcement. All right. Let's take a look at what happened on Tuesday. We started off with a bang. This candle is not really a good representation of what happened. So let's flip to the SPY. Okay, we gapped up. Whoops. We gapped up and we rallied a bit. We pulled back, got a bounce, and then we wound up closing below the open. So, the reason that the S&P Cash Index does this is no other explanation than I don't know. Okay, but that's the way it is. So while it looks like, we had a nice expansion candle and then just a little bit of give up, it really wasn't like that. Now, I'm not saying that Tuesday's candle was bearish. I would have liked to see us start strong and get stronger, or start weak and get strong, or whatever. I'd like to see us finish out the day strong, but it didn't happen. So now I want to see if the bulls are going to try to push this, get this above this little reaction high. All right, this is the high up here, 1292.66 from this big power bounce off the lows of last year. And if we get above that, what do we do when we get to the 78.6% retracement? On the downside, watch the gap fill. All right, the gap that should be here, but you can view it on the SPY, and I do a video on it on the blog as well if you want to look. So, that's what I'm looking at on the short term. One day does not a rally make. One day does not a breakout make. Volume was good, but compared to the last week or so, that's not saying much. All right. Overall, it wasn't horrible, but it wasn't, look at this, a huge volume move. No, relatively speaking, yeah, but I want to see that continue, and of course, I want to see what happens when we have a down day. How does the volume look like in that case? Because what we saw as 2011 wound down was the down days were trading on higher volume than the up days for the most part. All right, NASDAQ 100. Okay, Doji on the day. Not really that nice looking. Yeah, up nearly 2%, great, but you got to look deeper than just the net return. Okay, we couldn't get anything going after the open. Okay, the Russell came just shy of that 200 day and wound up selling back off. So that's still going to be the line in the sand there. Semiconductors, okay. I mean, yeah, up 1.14%, but That's not a nice looking candle, in my opinion. Got above the 50-day, and then it gave it back up. Banks, okay, that's a better looking candle. Up 3.25%, but still want to see what it does up here at these highs at 42.27. Just add a little there. Can't really get it. 42.27, and then you got the 200-day. Bank of America. Okay, nice, up 4.32%. JP Morgan, up over 5%. Broke out of this consolidation. Really nice. Getting the dogs of the Dow off to a pretty nice start. Of course, it has to hold. How about Citigroup? Yep, nice push. Okay, how about Northern Trust? Yeah, up 2.5%, but not a nice looking candle. And Zion. Yeah, also not really a nice looking candle. How about the broker dealer? Okay, 3.6%. Goldman, up 5.8%. Nice. Morgan, up 6.15%. Nice. Cyclicals, up 3%. How about Caterpillar, another doggy of the Dow? Up 3.75%. Still got to get over that 200-day moving average. GLD. Whoa. Okay, GLD, if it decides to update, which for some reason it's not deciding to update today. Yesterday it was SLV, and today it is GLD. So I will be back when I... oh, here it comes. All right, so here's SLV up 6.5%, right into the 20 EMA. Like I said yesterday, I want to give this a little bit, decide what it wants to do. So GLD up 2.5% nearly. Watch that 200-day, the underside of the 200-day. How about USO? Okay. Drew this in yesterday. Boom, broke out above it. Watch 40, hole number 40. And then some resistance up here, 40.77, 41.29. Then the top of this red candle here at 42.05. Apple. Okay, continuing its move higher, or attempted move higher. A lot of open air here, though. So let's see what it can do. Got this gap at 416, and then the lap at 422.24. How about Amazon? Okay, watch the 20 EMA at 182.13 as resistance. Google, boom! Okay, right past 650. Let's go set the last price. You can see it's at 127% external retracement of this swing. So if we can get above these highs from Tuesday, next level looks like the 700s. Wow, huh? Right up here, but these highs back here at from 07. Okay, format, get rid of this. All right. How about Priceline? Priceline was looking like it was one of the weaker sisters, but it had a really nice day. Watch the 50-day as potential resistance. CMG. Okay, so it creeped out of this little consolidation, then rolled over a little bit the end of the year, and then boom, it hit its target, right? And what was the target out of this consolidation? New highs. And that's what it did. It hit it up here, 350s, but it rejected it. Definitely something to pay attention to there. Watch to see if that's a big reversal candle. RIM up 7.38%. Wow, nice move, right? Still only $15.50 though. Netflix up 4%. How about Cena? Yep, Cena up 7%. Watch the 20 EMA as potential resistance. Potash, somebody wanted me to look at. 50-day moving average resistance is Visa. Looks like it may want to try to push higher. MasterCard, not looking as sharp. And what about American Express? Above the moving averages, but formed a spinning top on the day. All right, so let's see who's going to step up here. Are the bulls going to step up and try to push us past that reaction high and into that 78.6% retracement? Or was this just a flash in the pan? Get all the bulls trapped, and now they're going to sell it off. We'll see. Okay, have some things coming up this week. The job numbers on Friday. So that could lend to some potential excitement. But we'll see. One day at a time here. Let's see what happens on Wednesday. Have a great trading day. Talk to everybody again on Thursday.